This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Cardinal rule number one is when you're in an equity business, listen to the bond guys. The bond guys never listen to the equity guys. But, if you're like a Gene Munster, you really pay attention to what the debt side looks like as you look at your area. Gene Munster's area for decades, Piper Jaffray, and now on his own. Gene Munster really looking at technology. Gene, Robert Schiffman of Bloomberg Intelligence said, look, Microsoft's a AAA. Apple's just below that. Microsoft could do $20 billion debt offering right now and not, affect anything at all. Do we have any understanding of their free cash flow? And Gene, one idea here on their free cash flow, Apple's retired 39% of their shares in the last decade. Do we understand their profit?
I don't think so, Tom. When you think of the free cash flow with Apple, we're talking $50 to $60 billion per year. That's free cash flow. When they talk about their current cash position, call it roughly $75 billion. I mean, they've continued to try to whittle that down, return that to investors. Welcome Meta to that conversation regarding returning capital. But Apple is unique in that it is, it's mind-boggling. If you look at the past year, revenue has basically been down 2.5%, but they've generated, call it $60 billion in free cash flow. And I think it just speaks to the strength of their margins.
Paul, I put this out last night in preparation for Gene Munster that I'm just had it with this sophomoric growthiness study of the media, and it's about the profit. And as Gene mentions, Paul, Zuckerberg gets the 2023 trophy. The way he has shifted Facebook to a profit juggernaut is jaw-dropping.
It really is, and the stock got rewarded for it, too, more than doubling here. Hey, Gene, so last night, busy night for you and busy night for tech investors, Apple, Amazon, Meta. I want to start with Apple here because for me, and I think for a lot of investors, it's very much about China here, and I'm not sure I heard anything from Cupertino last night that makes me feel more comfortable about what's happening in China. My concern is maybe the consumer's moving away from Western products in general, and maybe Apple in particular. How do you think about China?
China hit the wall. It was down 13% year over year. It was down 2.5% year over year in the September quarter. So we saw that deceleration. The macro has definitely impacted that. If you look at broader Apple business, it was up 10% in Europe, 15% in Japan, 2%. So if you think about what's going on at Apple, it really can be zeroed into the weakness in China. China's 20% of their business. And then the question comes to, what does China look like going forward? And I think the answer is to continue to expect it to be down kind of this 10, 15% for the next few quarters. There is the question, is this just a macro issue related to China? Or to your point, is there just a structural shift away from Western products and Apple in particular? And what we saw was some conflicting data. We saw the China business being down like we talked about, but we also saw that Apple, in terms of its market share, IDC, reputable source, said that that the iPhone is now the best-selling smartphone in China for the first time in the December quarter. And so I think the answer is this is more about the macro. I do want to put one just slightly finer point on this. There is a dynamic of what's going on with the government and their commentary about buying Apple products. Now, if you look at the number of government employees, this basically can create about a 3% headwind to China's business. It's not a formal policy to avoid Apple products. It's been this informal kind of wink and nod. But I think that probably plays into all this too. When you roll it all together, I still think China's a big opportunity for Apple. India is becoming a bigger opportunity too, and I think that this storm will pass.
Yeah, and that's kind of, I think, the message we heard from Tim Cook. I think he's probably taken a little bit more of a longer view. All right, let's switch to Meta. You mentioned that, and just what a story here. I mean, and Zuckerberg gets a lot of criticism, and he obviously was on the Hill again recently. But boy, did they turn this company around in the last 18 months. It was, since its inception, it was a top-line growth story. And then he wisely focused on costs and profitability. And boy, that's paid off for the company. What's your view there on Meta?
The cost that's nice. Absolutely has paid off. I think there's a bigger dynamic playing out here, which is just related to their demand. And they had their revenue was up 25% year over year in the December quarter. They guided, you got to go to the high end of their guidance range because they're probably going to exceed that. Would imply an acceleration to 30%. Their price per ad was up 2% year over year. A year ago, their price per ad was down 22%. Yep. So that's outside of the whole expense control. The ad market is better, but there's something. The bigger thing going on is that their products people want. I mean, that's the maybe optimistic way to say it. The more skeptic way to say it is they're addictive. Deepwater does own Meta. This is something that I struggle with. But we saw it in the numbers, in the engagement. It's playing through to the revenue. One just other quick thought on the engagement number here. Their DAUs, this is a metric they're no longer going to give, daily active users, but that was 2.1 billion for Facebook. That was up 6% year over year. It's an acceleration over the past few quarters. Remarkable testimony to how people say they don't want social, but they spend all their time.
Yeah, well, the daily average use of Instagram in a Keene household is incalculable. You can't do that number. With us, Gene Munster, for this entire half-hour commercial free. He's with Deepwater Asset Management. Gene, here's the real world. It's owned by portfolios. NASDAQ's up 1% right now. And we're going to pick on our good friend Will Danoff up in Boston. He's been doing this for a few years at a shop called Fidelity. It's his largest holding. It's grown out where Meta, Facebook, is 12.x% of Will Danoff's contra fund. But he's probably under-owned it as well. Just the share price today moves contra fund 2% off the leap in Meta. Are these stocks under-owned by institutional Wall Street?
I think Meta is. I think there's still some controversy around just what is ultimately, what does their advertising business look like? I think there's concern about regulation related to it. If you look at the multiple relative to the other big tech companies, it still trades at a discount. So it's going to be, I bet the earnings go up by more than 20% today. The stock up 18% in pre-market, I bet earnings go up. So I think the multiple probably is actually surprising and to stay in that low 20 range where you look at the rest of big tech kind of loosely in the low 30 range. And so based on that, I don't think this is over-owned. And I think that there's, there's room to go. I think this should trade in line with the rest of larger tech. Okay,
so they're $3 trillion. An Uber bull like Dan Ives is what Paul? $4 trillion, $5 trillion. Sure. Add it up, Gene Munster, and someday these four stocks, the Magnificent Four, whatever, NVIDIA, I'm not there yet. I know Gene is, I'm not there yet. But Gene, they're going to have an all-in value of, say, $15 trillion. Are they like the Rockefellers, Standard Oil, Ida Tarbell of 120 years ago? Or there's going to be a primal cry, they're too big? Are we getting there quickly?
I think we were there 3 years ago. And I think that, this is lessons learned from the past here, just about can things keep going, about bubbles. There was the everything bubble a couple years ago, obviously what happened in 2000. So I'm skeptic. I want to be just cautious, like, can this keep going? But just the case that I think these will continue to get going. It is as simple as artificial intelligence. I think that this is something that now Apple has stepped into the game. That is as much of the rancor that goes on Capitol Hill related to large cap tech. I think lawmakers understand that these companies, having strong domestic companies that are building AI, I think they understand the importance of that from a national security standpoint. And so I think that there'll be always talk of regulation, but I think these companies will continue to get bigger.
Are you watching UNC Duke this weekend with Vision Pro?
No, I'm going to go old school.
You're going to go old school?
Yeah.
The Zenith with the rabbit ears, right?
A can of Budweiser sitting on the couch.
What Vision Pro, Paul, what would you and I, Lisa, help me here. What would you and I use Vision Pro for?
I don't know. Well, that's kind of where I want to go
Please,
with
go to
Gene here.
Gene.
Gene, where are we? Where is Mark Zuckerberg these days? When you speak to him, when you hear his commentary with the metaverse, that was at best a distraction for this company, and at worst maybe a real suckhole in terms of capital investment. Where are we with that?
I hope we're wrapping it up, but I think the reality is that they're doubling down. And again, mentioned we're investors in Meta. We wish they would essentially pare back what they're doing there. And the simple reason is they had $1 billion in revenue, first quarter of $1 billion in revenue in Reality Labs. They lost $4 billion. They said that the amount of losses annually are going to increase. This is going to be $15 billion plus. This is real numbers, even for these big companies. They're spending a lot. What Apple is showing today with Vision Pro, from a price standpoint, it's 7 times higher. From a technology point, it's probably 30x better. And I think ultimately is that what Meta wants to be spatial computing, the metaverse for the masses, is that I do believe that will roll out eventually. But I wish that they just wouldn't spend as much. Spend $5 billion a year, not $15 billion a year. Mm-hmm. But to answer your question, Paul, where are they? They're doubling, tripling down on this, and I kind of see this as BlackBerry versus the iPhone.
To Global Wall Street, we start strong in the 7 o'clock hour. Gene Munster with his Deepwater Asset Management here on this huge societal juggernaut we're all riding, the technology companies. Speaking of technology, Apple CarPlay, we are humbled. I got goosebumps over the January numbers. Apple CarPlay on Apple, on Android, Bloomberg Business app downloaded free, and it works. It's safer. It's better, as Apple says. And on YouTube, Ian Bremmer, technologist, picks up Jeff Gottfried's work at Pew Research in New Jersey over what do we actually consume. And Facebook's right up there, and Instagram's right up there.
Yep, absolutely.
But Paul, Ian Bremmer points out 8 in 10 Americans are engaged with YouTube. We're on YouTube, Bloomberg Podcasts. Look for it.
Absolutely, we're there. Hey, the third company reporting last night, Amazon. Boy, another really good
I thought they
quarter.
were they were terrible.
Stock's up about 6.5%. Pre-market trading up about 40% over the trailing 12 months here. What did you hear from Amazon last night, Gene?
Well, this one, just in terms of the stock reaction, is a surprise to me. I would, if you'd have given me the press release beforehand, I would have said it's down a few percent. So what we heard last night was that AWS, which is typically the pressure point that people focus on, was up 13%. That compares to 12.5% growth in the September quarter and 12.2% in the June quarter. So we saw, I would say, a 50 basis points acceleration. Compare that to what Google Cloud did. They showed a 320 basis point acceleration to 26%, and Azure 100 basis point acceleration to 30%. Put all this together, AWS should and continue to be the focus for Amazon investors. And in fact, yes, it showed acceleration, but it still is losing share notably. And I think when you fast forward this 6, 12, 24 months from now and think about how these platforms are going to be adding more AI capabilities for the people that use them, I think that advantage Microsoft and Google. So I think it's going to be increasingly competitive. The reason why the stock is up is because they beat operating income by 50%. They crushed it. Yep. And this is like the roller coaster game of Amazon and earnings. You get a boom bust cycle for 2 or 3 quarters, and then a boom cycle, and then a bust cycle. And so, Paul, to put it all together, I think Amazon quarter was good. It wasn't great. They got people excited about this Rufus, this assistant shopper. I think it's pretty cool. I think it's going to help engagement, help people find products better on Amazon. Good use of AI, but to me doesn't justify what's happening with the stock this morning.
All right, let's step back a little bit, Gene. We kind of ran through the big 3 tech names that reported last night. I'd love to get your view here. Now that we've had a little bit of perspective here, 4, 5, 6 quarters where we've had a lot of these companies talking about generative AI, I'd love to get your view as to kind of how you think it kind of really sits as a theme in technology. Is it real? Is it, and how material is it? And how do you play it?
So is it real? Yes. How material is it? The example, my framework is that if you do the scale of 0 to 100, we've talked about this, 0 to 100, 100 being electricity, I would put the smartphone in terms of importance. Electricity is 100, smartphones 25, the internet's 50, and I think generative AI and AI more broadly is 90.
Wow.
I think it is just a step
that's good
function.
perspective.
And I think we're entering what's going to be a 3 to 5 year bull market that's going to culminate in a bubble. It, by definition, almost has to happen. If this is in fact 90 out of 100, we will see a bubble. So I'm on board that these can be transformative. I mean, we saw Tim Cook finally utter those 2 letters yesterday in the prepared remarks. And I think it's setting Apple up to enter with a foundation model this year. So big picture, I think it's hard to understate how meaningful of a change this is going to be.
Gene, I want you to shift here to long ago and far away when we hung on every word you said at Piper Jaffray about should we be in these stocks. There's a lot of people listening and watching on YouTube and CarPlay who are saying, I'm in this, or I think I'm in it in my 401k, or I'm not in it, and damn, I got to get into it, but I'm scared stiff. I want you to talk the 5-year vision of these companies that have come so far in the last decade. Do you extrapolate out the present trends? Is there a lesser slope, or dare I say, can they even get convexity and accelerate free cash flow, revenue growth, their position within American society?
I think when you look at the kind of scope of where wealth will be created around AI, I generally think of it as in 3 buckets. I think that there's we'll call it the safe bet. And I think that is this mega cap tech. And I think it's not just own the Magnificent Seven. I think they are, I think the best one, surprisingly, is Google. I think the best opportunity that's underappreciated relative to what's happened with the other ones, I think Google. So this is not investment advice, but from our perspective, we own Google and Meta. And so continue to do that, continue to think that's a great place to be, even with the upside that they've had. But we also believe that AI is going to have a profound impact on companies that are less well known. We have an ETF, the ticker is LOUP. It's a frontier tech, which means that it effectively identifies what are the transformative themes over the next 3 to 5 years. AI is a big part of that. But I think some of these smaller companies that haven't had this tremendous run, I think that's a meaningful opportunity as well. And then the last piece is what we call the ordained late stage private companies. These are companies like Hugging Face and Databricks and OpenAI, Anthropic. These are companies that are pure play AI companies. And so I want to go back and just answer your question specifically, Tom, is that yes, I think you should continue to own a select companies within the Magnificent Seven, because I think they'll continue to benefit. But as far as trying to get outperformance relative to the market, I think you need to try to search for some of those less well-known sub-$100 billion, we call that small now, sub-$100 billion small tech companies.
I'm long Wayne Labs. Wayne Labs.
Exactly. All right, so Gene, in your fund here, what are some of the names that you guys own that maybe people don't think about? I mean, everybody's kind of feels like they have their own call on the Apples of the world, the Amazons of the world. Are there parts of the tech space that you think are underappreciated out there?
Yeah, we actually go and look for companies off that beaten path. I mean, there's one company, Nubank, ticker NU, as in November uniform. And Nubank is the fastest growing bank in Latin America. They've basically gone from nothing to about 8% share. Like 1 in 2 people in Brazil use a form of Nubank, but they're using artificial intelligence to help better identify, get the underbanked population to be banked. And it's been a great use case of that, and it works. It works for risk management. So Nubank is a company that we own. Coupang, many of you may not, that may be a new one. Think of this as the Amazon of South Korea, and they basically have a pole position there. South Korea is doing relatively well, and then the last one, Mercado Libre.
Yeah.
I hope both of you are sitting down for this one. Just recently, we spent a lot of time, 7 years working in China, covering these bringing a lot of these companies public, the tech companies in China. We've just in the last few weeks actually made some investments in some Chinese equities, tech equities.
Whoa.
Nice.
I think we'll leave it there. I got to go call my broker. Gene Munster, generous of you to be with us.
Thank you, Gene.
Through this half hour. We're going to do a roundtable here. Mona Mahajan joins from Edward Jones, Senior Investment Strategist, and Sara House from Wells Fargo. We're going to try to keep him for 2 hours. I believe Sarah's got to go at some point. Jay Bryson had a tantrum and said she can only do so much time with us. And Mona's with us. We're thrilled to have both of you, really with two different remits. Sara, I got to go to you first because I got, with revision, a 479,000 statistic. Do we blame this on seasonality? Is this because Amazon and Bloomingdale's hired more people? What's the asterisk Wells Fargo sees in this buoyant report?
Sure. So, I mean, I think overall the message is this is a job market that is still incredibly strong, despite I think, all the efforts for the Fed to cool the economy. But I think you're right in that there probably is some flattery from the seasonal. So January is the month where we tend to get the biggest move in non-seasonally adjusted numbers. So if you see any sort of deviation from that, that can flatter the January numbers. We saw that last January as well. But I think the message here is that we're just not seeing the same degree of layoffs that we typically would in January. And that's why we're getting such a robust headline number again here in January.
I mean, the jobs numbers, I mean, people, I understand there's a standard error and everybody gets it wrong. I get that. But it's month after month after month. We're getting nowhere near 150 or 120. David Kelly over at JP Morgan, Sara House, is looking for some form of migration to zero or even a negative statistic. Why are we creating so many jobs? Is it lower decile staff jobs? Is it a complete underestimation of a technology overlay? What's the why for 200 whatever thousand per month?
Yeah, so I think one aspect is we're still getting, I think, pretty strong growth in labor supply. Now, we can't compare the month-to-month changes here with the January numbers because you did get some population control adjustments. But, overall, you saw the labor force participation rate hang in there, and it was up about 0.4 percentage point last year. And so that's helping businesses fill positions, meet with still very strong consumer and even business demand. So I think that's a big part of it as well. And I think just in some industries like leisure and hospitality, government, for example, there's still catch-up hiring going on from the pandemic as well, which I think has
Hey, Mona, I'm looking at the two-year Treasury. We're now up 16 basis points, 4.36%. So from your perspective, Mona, does that kind of take any ambiguity around a March rate cut? Does that take that off the table now?
Yeah, I think it does. And, look, I think most market participants, we were 50-50 ahead of the Fed meeting in terms of a March rate cut anyway. I think now people are looking towards May and June for the Fed to start its rate cutting cycle. We do still think that they will pivot from this pause to rate cuts later this year. But Jerome Powell told us on Wednesday he's willing to take his time. He doesn't want to see inflation pick up again. And in fact, this jobs report this morning may give him a bit of pause when he sees that 4.5% wage gain figure, average hourly earnings figure. I'd be curious to see what the mix of new jobs added is if we are seeing higher paid workers take up more of that mix versus the lower skilled, lower paid parts of the market. But certainly what we're watching is the strength in this U.S. economy and inflation that, immaculately has been continuing to move lower despite the strength in the U.S. economy. We want to see that continue in the next few months before we start seeing that rate cutting cycle.
Yeah, just the highest estimate in the Bloomberg survey of 77 economists was 300,000. So it just kind of blew away all expectations. So Mona, given that, how do you position it? Like, you're going to be talking to clients all day today. How are you going to position kind of how this data point impacts the Fed?
Mona's going to be by Meta.
By Meta.
That's going to be
exactly.
Mona's response.
So how does this impact your market outlook here?
Yeah, look, I think it kind of reaffirms some of the messages we've been giving to our clients as well, which is one, we do think if 2023 was the year of narrow leadership, folks piled into mega cap tech, the AI trade, they also piled into cash and CDs, cash-like instruments. We think 2024 is a year of broadening in participation. So yes, we still like the AI tech trade. We think it's an early innings of a long-term secular bull market, but we want to make sure that we have exposure to other parts of the market that may play some catch-up, especially in an environment where we're not seeing any cracks in the economy thus far. We could see cyclical parts of the market, even parts of value, and across the market cap space as well. We would say also with yields remaining relatively higher, not returning anywhere near the zero bound, we think longer term that means better balance in your portfolios between growth and value, and bonds. They continue to play a critical element here as well.
If you're just joining us, Mona Mahajan, Edward Jones, Senior Investment Strategist with us for this entire half hour. Sara House with Wells Fargo, their Senior Economist, as well as we look at a stunning American jobs report. There's no other way to put it. I don't have the calculator. I don't my HP12C's off right now. But all you got to know is look at 400,000 in the last 60 days, over 600,000 jobs created in America. Robert up in Connecticut, he's got the Bloody Mary going on Friday already.
Sure.
And Robert, thank you for sending in the nice information there on seasonality, on retail, on healthcare as well. Sara, I'm going to ask you a question you don't want to answer, but it's Rude Friday. You got to be kidding me that Jay Powell wasn't briefed on this for that Fed press conference.
Good point.
Now, he may not have known the numbers because, we play by rules in America. But you don't think someone like Sara House, the Sara House at the Eccles building, tapped him on the shoulder and said, "Excuse me, sir, it's going to be a ginormous number on Friday." Sara House, did he know that?
I don't think so. I can't say for certain, but I think in a recent interview with David Rubenstein, he indicated that he probably doesn't get those numbers until Thursday. And, the BLS does cut it close in terms of how many days they have to prepare this. And so this was a rather early report as well. So my inclination is I don't believe he had these actual numbers.
Sara House, seasonality. I got a lot of emails coming in from seasoned pros, retired pros, and that. Come on, it's January. Was this retail, healthcare, and oddities? When you dive into this afternoon with Team Bryson, are you going to look at it being seasonality, Sara House?
Well, again, it comes down to the fact that we just did not see as many layoffs as we usually would this time of year. Now, there were some soft spots in the report, so you had a pretty meager gain in leisure and hospitality, but you all saw other sectors which actually can see even noticeable declines in January, like professional business services. That posted a nice increase as well. Retail was very strong, so I think that suggests that you saw retail companies, they didn't hire as much holiday workers, but that also means that they don't have to let go as many holiday workers. So that's probably flattering that roughly 45,000 gain we saw in retail on a seasonally adjusted basis.
Hey, Mona, when I see a GDP print for the first quarter of 3.3%, significantly better than expected, I see the labor market significantly stronger than expected. It kind of makes me feel like I want to run out and buy cyclical stocks if the economy's doing better than expected. How do you feel about those types of names coming out of the great Midwest?
Yeah, actually, it's a great point and something that we have been considering. And I'll give you an interesting stat. When we look historically in an environment where the Fed starts cutting rates and we are not in a recession, perhaps the environment we're in now, versus the Fed starts cutting rates and we are in a downturn or recession, the market outcomes are much better, of course, in the non-recessionary scenario. And in fact, the S&P in the 12 months after the first rate cut is up about 8 to 10% versus flat to slightly down in the recessionary scenario. So we do think there is still historical precedent. The history may not repeat itself, but there is some precedent for better market outcomes. And we think the parts of the market that will show those better outcomes are exactly the ones that you highlighted. We like the cyclical parts of the market, areas like industrials, for example, especially if global growth starts to play some catch up in the back half of the year, could do well. And we're, taking any opportunity we can early on with volatility to position ourselves for those rebounds.
Sara House, we're going to let you go now to duties at Wells Fargo. Lots to write up on this stunning jobs report. Thank you so much to you and Team Bryson for perspective this morning. Mona Mahajan continues with us. Edward Jones here, commercial free in this half hour of a bang-up jobs report. There's no other way to put it. We welcome all of you on Apple CarPlay and YouTube. Again, you search Google, right? You use Bing, Paul?
I'm pretty much a Google person. Matt Miller is a Bing converse.
Matt Miller's a Bing
Chat
person?
GPT, yes, he has made the
I have
switch.
to look if Matt Miller's the tech study here.
He is, so
I guess I got to look at Bing. I'm not using Bing. I'm looking Safari or whatever. But you go YouTube,
He's got an
Bloomberg.
encyclopedia.
Lisa, help me. Are you Bing?
I'm Google. Sorry.
Mona, are you Bing or Google or what?
Oh, Google for sure.
Okay, Mona Mahajan weighing in there. That's the Edward Jones perspective here.
Personally.
So we say good morning. YouTube, Bloomberg podcasts. Good morning, Matt Miller. Look it up on Bing if you can. Mona, I need a reset here. The tech cash flows are stunning.
Yep.
Now, they make up 25, 30% of the S&P 500. Let's say they go to 35% or 40%. Where the math doesn't work in retirement planning. How do you at Edward Jones deal with that?
Yeah, it's a great call out. Look, when you look at any U.S. index, but particularly the S&P 500, which is pretty much a global benchmark, 45% of that index does come from growth tech type of stocks and sectors. And so even if you are just an index investor, you are 45% invested in technology. And of course, when we think about a global stock market, it doesn't look the same in Europe or even in Asia. In Europe in particular, much more heavily weighted in value parts of the market, industrials, manufacturing, financials. So when we think about putting together a diversified portfolio, U.S. is still the largest part of that. And within that, we still see value in, and we talked about this briefly earlier, in the technology space, because not only have we seen cash flows increase, we've seen earnings increase quite a bit as well. And we do think the AI boom and trade continues over the next 5 to 10 years. Some of that has been priced in. The Mag 7 was up 70% plus on average last year. So we are starting to see we are starting to see a bit of that priced in. We think we do get better opportunities in the weeks and months ahead, but we don't want to give up on that trade early on. We do think that not only will we see those index players benefit, but over time we'll see other parts of the market benefit from the products that come out of it. So the manufacturing, even financial sector will ultimately benefit from AI as well. But you have to think about where all those stocks are housed.
Paul, can we have a surveillance moment of silence for Neil Dutta at Renmac?
Yeah, sure.
These job numbers are like Neil Dutta numbers, where he's saying, look, we're creating jobs. And the heart of his thesis is we're creating inflation-adjusted constructive wages, which goes into consumption. Most of us spend our paycheck.
Yes, we do.
Which goes into GDP, nominal revenue, and that goes over to Mona Mahajan's world.
It does. And, all the Sweeney offspring are employed, so that's good. That's kind of my personal gauge of employment out there in the world. Mona, let's talk about valuation here. We're right smack in the middle of earnings. We had some really good tech numbers last night from some of the big tech names. Broadly speaking, if the bear case out there that we speak to some people that are more cautious, they're going to call in valuation. They're going to say the stocks have kind of gotten ahead of earnings out there. Do you have concern, or what level of concern do you have about valuation in this market?
Yeah, it's a good call out, and we had seen some valuation expansion. If you look at the S&P 500 last year, it went from about 17 times to about 20 times by the end of the year. Of course, if you look one layer underneath the surface, if you look at the S&P equal weight valuation, that's still actually pretty reasonable, about 16 times. And of course, what drove the valuation expansion for the most part was that Magnificent Seven technology trade. So that's why we think, when we think about the year ahead, yes, we'll get earnings growth, but the other part of the story is where can we get valuation expansion? And we do think more scope for valuation expansion is in that equal weight, the 493 stocks that may have some catch up to play.
So you're talking about PE expansion. You're talking about you're modeling out within somebody's blended 401k an equity PE multiple expansion this year.
Yeah, we think certain parts of the market, we talked about value, cyclicals, all of those still are pretty reasonably valued. Some of them are even priced to, this recessionary environment that hasn't showed up yet. And once we are confirmed that we continue to get at least decent growth over the next few quarters, we could see a valuation expansion. Also keep in mind, when the Fed is cutting rates and interest rates are over time moving lower, that's better for the valuation story as well.
Mona, thank you. Mona Mahajan, Edward Jones
you,
here.
Guys.
Just really brilliant here on this allocation between bonds and equities. I have anticipated this And Paul Sweeney, how did we get these two guys? Guys, this is like it's spring training where pitchers, catchers show up and everybody's there. And then the two studs wander out about 8 days later. just take 10 seconds here. How did you find Anurag Rana and Mandeep Singh?
We got very fortunate because when you're building a research department, arguably, you have to lead with technology, just like the market leads with technology. You have to have a world-class technology team. Yep, you have to have a world-class technology research team, and we're able to do that. And the way we did that is we hired Mandeep Singh and Anurag Rana. They both are senior technology analysts, and they built out a global technology research team for Bloomberg Intelligence. So we appreciate all their hard work. And now these two folks are front and center here on a day when you've got some big tech earnings. And I'm going to start with Apple. So that means I go to Anurag Rana. Anurag, did we learn anything from Apple and its position in China? Because China's 20% of their revenue. It looks like it's more competitive. It looks like the economy is not as strong as they would like to see it. What do we learn, if anything, about Apple and their growth opportunities in China?
What we learned is, yes, long term it is a big story, but at least for the next 12 to 18 months, you could say that things are going to not be as smooth over there as they try to figure out how to be more competitive, give more rebates, try to work with more carriers. So Apple has their work cut out for them in China, and we are not expecting a rebound anytime soon.
All right, so we'll get back to that because there's a lot to peel there, Anurag, on Apple. Mandeep, we also had Amazon last night, and we also had Google last night. Let's start with Google because it kind of goes to that. Oh, I'm sorry, Meta. Yeah, thank you very much. Meta, thank you.
Facebook.
Yeah, whatever. Yeah. So what did we learn from Meta last night just about the digital advertising environment out there?
Yeah, I mean, it was a beat and raise quarter, and that too, with expectations being high, clearly they delivered. And I think the tailwind was coming from multiple fronts. So one, the digital ad pricing environment is getting better. So that means, online advertisers are spending more on ads, and that's helping the pricing. And the other thing is the relevance of AI for all these ad companies. I mean, Meta is definitely the scale player, and they have invested heavily in AI, and that has actually helped their ad infrastructure far more than anyone else out there. So that showed up in the numbers, and that was the reason for the beat.
I want to dovetail here, guys, and folks. This goes to just the sheer margin profitability of all these companies that Mandeep and Anurag follow. All you got to know is Apple, because they're actually making something. Maybe it's a little lower EBITDA margin. It's like 30, 40%, whatever the number is. And the rest of them are minting money with a 50 cents. Every dollar they bring in, they're basically bringing 50 cents down to be distributed for cash flow. Michael Mobison over at Morgan Stanley, guys, writes up a 25-page essay here on increasing returns, about what technology is doing as it gets bigger and bigger. Mandeep, let me start with you. Do you just extrapolate out these growth lines? I mean, is Peter Orszag at Lazard would say the glide paths here? Are they just smooth extrapolations out 3 years and 5 years, Mandeep?
No, I mean, look at Meta, right? Last year, we were talking about, whether this company can grow, and, engagement was a concern, and they had negative sales growth, for 3 quarters. So clearly it's not smooth. And every time we have, a period of 30 to 40% growth, it follows with, low growth or no growth, especially on the ad side. But what they have shown time and again is, the online ad business is secular. There is that shift. Right. And I would say we are closer to saturation than we were probably 3 years back. So at the scale these companies are, it will be hard for them to maintain that 20% plus growth.
Anurag, I think I saw Tim Cook, I think over at Fox, doing the reality, the virtual Vision Pro reality in front of the Apple store in New York. I stood in front of that store a lifetime ago with my favorite Lawrence Haverty, who covered tech before you guys. You guys were, these guys, Mandeep and Anurag had slide rules going in undergraduate school when Larry Haverty was working it up. And guess what? Apple was going out of business then. It's going out of business now. Anurag, Rana, do you see the innovation trend at Apple that will sustain these glide paths, sustain this cash flow?
Yeah, no, I'm not that concerned about Apple in the long run. I think they'll be fine. The problem is what happens in the next 2 to 3 years. And that's where some of the problem is, just because China is not growing. China is the big growth driver in the near term. The Vision Pro is not going to do anything to, accelerate their growth rates. It's really, all the phones that they're selling in emerging markets, and China is the big market. So for us, we're not concerned about Apple in the long run, but in the short run, I think it's going to be very hard for them to grow, anything north of 5%, unless they throw that Gen AI stuff that they talked about on the call. If anything cool comes out of that in the next 6 to 8 months, then I'm going to be wrong.
Paul, iPhone GPT, it just means you can order takeout faster. Anurag, Rana, Mandeep Singh with us, Bloomberg Intelligence. We continue with us here, commercial free this half hour.
All right, Anurag, my good friend Laura Martin over at Needham & Company, she's out with a piece of research which I think is really interesting. Google, Meta, Amazon, on their conference calls, they mentioned either AI or generative AI like 50, 60 times each. Apple, like none at all here. Is Apple, what are they doing or not doing with AI? Are they not kind of getting that buzz?
I think they were caught, you could say, off the guard a couple of years ago when ChatGPT came out with very strong. I think they said on the call that they're going to have an event sometime later this year. And if they are able to release some tools or, some cool features in the phone that allows them to actually capitalize on some of this buzz, then what's going to happen is if the iPhone 16 has those features embedded in them, then you can actually create a new refresh cycle that we have been waiting for. Remember, we've been talking about the extension of the refresh cycle for the last 3 to 5 years. And if that happens, and it's a very, very big if, then iPhone 16 can truly put a dent to my thesis of slow growth, and we see, a big number next year.
Interesting. All right, so Mandeep, just going on the AI theme here, I know you and the research team at Bloomberg Intelligence have done a lot of research on this. You guys have a big definitive report out on AI. I guess my question is, do we have a sense of how much of this AI, I'm using air quotes for those on the radio, tech spending is incremental, or is it just putting another name on usual tech spending on hardware and software?
I mean, based on what we are seeing right now, with the semi companies, especially the likes of NVIDIA and AMD, it sounds like, this spending is incremental. And yes, companies are slowing down their spending on traditional servers. So there is some market share shift going on as well. But clearly, I would talk about above trend growth for the next 2-3 years. And that's where our, 1.3 trillion number for 2032 comes from. Half of that is spending on data centers, hardware, really changing the infrastructure. And, the software part will follow, as we are seeing with the hyperscalers, Microsoft, Amazon, and Google also benefiting. So their growth rate should go up as well. But clearly, there is incremental spending around AI.
When you talk to the people, is there within the culture, and I'm reading, I haven't read the whole book yet. I'm actually reading every word of it. Satya Nadella's 1-volume biography is spectacular about the courage he had coming out of southern India. And there's too much cricket talk in it. That's the only problem I have. But when you guys talk to the cultural, the double E's, operational research people, do they believe in the financial profitability of what they're living every day? Mandeep, the guys like you and Anurag, Mandeep Singh, do they believe in the link over to profitability that we're observing right now?
Yeah, I mean, I think especially with a company like Microsoft, you can see that, they have priced their services in a way where Copilot, they're charging an additional $20 subscription. So look, they are making a big investment, and it is, to acquire customers, to drive that stickiness, but I do think it will be profitable.
Okay, but first principles here. Let's get right back to basics. Lisa Mateo is going to be with her daughter this weekend, and Lisa wants her daughter to be brilliant. So Lisa's going to say to her daughter, "Dear, let's sign up for Copilot." Mandeep, when I sign up for Copilot GPT, what in God's name do I get?
Well, so it brings productivity, right? And at the end of the day, if we are more productive in our jobs, if we can get rid of the mundane things that we do in our day-to-day jobs, the redundant things, I think that's what drives productivity and efficiency. And we know, look at how far we have come with PCs and Word and Excel, what kind of productivity it gives you. So this is like taking one step further in terms of what are the redundant things that you do in Word or Excel.
So, Paul, you're going to ramp up Copilot.
Sure.
And it's going to make you more efficient in ordering
possible?
the marginal pork roll.
Yeah, that's right, exactly.
On the Jersey Shore this summer, right?
On the grill in Jersey Shore. Anurag, talk to us about just kind of your sense of just overall tech spending here. I know
good question.
You guys have talked about the rate of growth slowing. Do you expect a reacceleration here?
Oh, yes. Actually, I've talked about this quite a bit. So, we did a survey back in November, December, and we really got some really good results out of it. We think this year is going to be the first year of rebound after 2 years of underspending. We've talked about cloud, for example, quite a bit. Amazon's cloud commitments were just released this morning. They're up 41%. So that's a massive acceleration from last quarter. Over the next 12 months, we do expect, sales growth rates for almost all major categories in cloud to pick up, perhaps more at a faster rate, more in the second half than the first half. And I think that puts us into a very good 2025, because if you have strong bookings sometime this year, they're going to translate into much faster revenue growth next year.
Man, if you don't give me any couch time, what I do, folks, when I decompress here is I go up to our acclaimed food court and I sit on the couch. The food court in London is better than here.
And that's saying something.
And Washington is the best. Washington's the best food court we have in the world. But I'm up in the food court. I'm putting down the Cheez-Its. And, I'm having fun. Anurag gives me couch time. I never get any couch time with Mandeep.
He's too busy. He's too busy.
So, Mandeep, my question to you that I'd ask you sitting on the couch is, this stuff's a large part of our diversified portfolios, index funds or active managers that we have. Do we own too much Meta, the moonshot that it is today? From where you sit in our conservative money, do we own too much tech?
Look, these companies, the 6 tech companies in the Magnificent Seven, they are wonderful businesses. There is no doubt about, how good they are at scale and how they keep growing, year after year, and they are very profitable. So clearly, they have an outsized influence in our lives. And there is a good reason, to be proud of them as, American companies that have a global presence. And that's why, they will keep delivering. The question remains, what is the right valuation? And that's where, you look at a company trading at 35 times earnings, and you have to ask yourself, how much good news is priced in? And yes, it's a phenomenal business. It's growing at a great pace. But then there is a price that you pay as a shareholder. Right. And I think that after a while, a lot of the growth is priced in and it becomes very crowded. And that's what you have to ask yourself.
Paul, I know you're shopping this weekend. The price you pay, you're going to be over at the Apple store like Tim Cook today. And the answer is you got to go for the Vision Pro. There's just no question about it.
Absolutely. Apple CEO Tim Cook, he opened the flagship Fifth Avenue Apple store today. He's greeting customers. Why? It's Vision Pro release day. How about that? I'm not sure what Vision Pro is. Anurag, are you going to rush out to the Apple store in the greater Chicago area and buy your Vision Pro today?
I'm going to go test it out, but I'm not going to buy it. It's too much, too expensive for me. But I'm going to go play around with it. I'm going to ask people what they think about it. But
all right, so what does it cost? Do we know the price of this thing?
$3,500.
Oh, who's buying this thing? Is it just the gamers or?
Okay, but what did you learn about the 600 apps? Seriously, Anurag. I mean, Mandeep, you know, is going to buy it. You're not Anurag. But of the 600 apps, like what's the app that will make people spend that money, make businesses spend that money?
See, for consumer, it's really gaming. I mean, that's really where it boils down to. Disney, you know, you can watch a Disney movie. They have really talked about it. But I personally think the commercial use is probably far better, because if you have an architect, if you look at engineering, you know, those kinds of things, I think, you know, makes a lot of sense. But it's not. This is not a game changer. You know, you sell 1 million units, you make $3 billion. That's 3.5. That's nothing for Apple.
Let's wrap it up. Mandeep, if you've got the Vision Pro thing on, are you going to synergize here? And are you going to have Microsoft Activision? Am I going to be playing Diablo 4 on my Apple Vision Pro?
Well, so I think, again, it's a cool device. My problem with VR headsets and with Vision Pro most likely is going to be how much time can I wear it for? Because these are still bulky. Like you can use them for entertainment, but I just can't imagine, you know, putting the headset for 2-3 hours. So it gives you that immersive experience. But I still think, you know, it's too heavy for me to use.
You're on the Bloomberg terminal. Go to Bloomberg Intelligence, required read. Anurag, Rana, Mandeep Singh, after this tech juggernaut a weekend. With our newspapers, Lisa, Mateo. Lisa, what do you start with?
All right. Remember, Royal Caribbean came out with figures yesterday, but now their big news is this new ship, Icon of the Seas.
Monsters.
It's a monster ship. I know you're not into cruising, Paul.
I will be soon. I'm
but
turning the
okay,
leaf here.
so maybe here we go. $345 per person per day. Okay, but here's the thing. It's this multi-level ultimate family townhouse. It's going to run you an average of $100,000 a week. So I think that might be out of your league. 2 bedrooms, more than 25,000 square feet. That's like bigger than the average apartment in most places. It has a lot of balconies, multi-slides, lounges, hot tubs, game rooms. But here's the point. It's reserved for most of 2024.
That's
so
what we heard.
people are spending.
Yep. We were down in Aruba just a couple weeks ago, and every day the cruise ships are just flying in there. So the cruising biz is back, baby.
Oh, yes.
That's one of the most important things Ellen Zentner said today. She said, look, it is a bifurcated America.
Yep. And that's not good. I mean, it's not good. It's not good.
We agree.
You need the middle class.
Next, Lisa Mateo.
Yes, this one's for you. It's a little dog theme here we have going. Okay, so this is from the Times. It's a study of about 600,000 British dogs, okay, from more than 150 breeds. It turns out small dogs with prominent noses, they live longer than the bigger flat-faced dogs. So like the French Bulldog, for example, that has the flat
Which
nose.
is the most popular breed these days.
Yes, it is. Yes. It is. But the short snouts, they have respiratory problems. They can get heat stroke, things like that. So that's the problem with those dogs. The
vet that I go to in New York, she's just absolutely lovely. And what's great about her, it's the Horace Mann Veterinary School. You make the check right out to her kids' prep schools. Yeah. You go in and it's like, you think you're going to spend $282 and it's like $914. You just write it out to Horace Mann. I mean, she says, Tom, save it. Just write it out direct to Horace. Man, my vet went apoplectic on this at one point, and she said, yeah, there is a bred issue here. And I'm very pleased to say that vet bill and kennel fee are cotons, which are in their own way a little twisted, but they have like the normal nose, and that's better. It's like actually a big deal in dogdom.
I did not see it. I learned that today. Who knew? Who knew? And female dogs live longer than male dogs, if you didn't know that as well. Yes.
That makes sense.
All right.
I think that's true of other
humans
species
too.
as well. Mrs. Keene has to be with one foot in a casket.
Do you recall Ken Pruitt once asked, why do men die before their wives? His answer? Because they want to. That was just Ken.
What do you got, Lisa, here? There's John Tucker helping us out there.
Love it.
Providing congestion in the studio.
The last from the Journal. This is about 20-something-year-olds. They're no longer hanging out like how Mateo used to do back in the day. You go to the clubs till late at night. No, that's not. They're in bed by 9 p.m.
This
Why?
is a huge
9
deal.
p.m.
Paul?
It's the link between sleep and better health. They say they believe in it.
Oh,
They're not going out.
Paul, I saw this week the first time Jim Carrey was ever on TV. It was with Johnny Carson. Everyone should see it on YouTube. Jim Carrey as a child, and it's all there. Everything he became is there. Absolutely mesmerizing 20 minutes of YouTube video. Paul, in the media business, we stayed up to 11:30 to watch Johnny Carson.
Sure, every night.
Why did this stop?
Well, no, the late night viewing is still pretty good. Late night TV is still important, and they still invest a lot. They still make a lot of money in that late night block there. So it's still important for television. But I guess it's not, according to the Wall Street Journal. The days of hanging out late for people in their 20s is over. I'm trying to think about my kids. I mean,
But you think about businesses
know,
are
my daughter's
changing.
going
Like
out.
businesses are doing these matinee parties that start at like 5 p.m. That's what they're starting
that's
to do
for
now.
me. That's my demo.
That's my
time block.
happy hour.
Do you guys
Exactly.
do you guys think, seriously, John Tucker, jump in here as well. Do you guys think, because his kids are ill-mannered, I mean, it's a better picture of what's going on. Do you think it's the pandemic? My basic take is the ramifications of COVID are with us far more now than we're living, day to day with our kids, the dogs, everyone. What do you think, Lisa?
That's a good point. I didn't even think about it that way.
We went to bed at 9 p.m. with COVID because
There's nothing to do.
Right? John, what do you think?
Now, I was looking at my Easy Pass receipts because I had to pay it this morning, and I'm like, what's this one? 3 a.m. on the Garden State Parkway. I'm like, that's my daughter. And I'm like freaking out. And then I realized, oh, no, that's me.
you.
I was going to work. No, they're in bed. No, they're not in bed early. No, this does not apply to my children.
Not to
Okay.
yours? No.
But
Well,
they're like going to bed at 9 p.m.
not my son.
This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.